dust. Esky in the boot, Kelpie by my side, singing Christmas songs. It's summertime and I am in my singlet, shorts and thongs. Oh, jingle bells, jingle all the way. Christmas in Australia on a scorching summer's day. Hey! Jingle bells, Christmas time is beaut. Oh, what fun it is to ride in a rusty Holden ute. Come the afternoon, Grandpa has a doze. The kids and Uncle Bruce are swimming in their clothes. The time comes round to go. We take a family snap, then pack the car and all shoot through before the washing up. Oh, jingle bells, jingle all the way. Christmas in Australia on a scorching summer's day. Hey! Jingle bells, Christmas time is beaut. Oh, what fun it is to ride in a rusty Holden ute. I said, oh, what fun it is to ride in a rusty Holden ute.
Oh, yeah, there's my brother and I back in goodness knows when. Actually, I tell a lie, that's not my brother and I at all. But welcome, it is going into that season known as Christmas. December, here we are. Not sure everyone celebrates it, of course, but if you do, then we'll probably have a few more little ditties like that before we close on December 16th. So, fasten your seatbelts or not. Thanks for joining us for Trading Buddies on this Monday.
Did I miss the tune?
You missed the tune. Goodness me.
Sorry, mate. I was just trying to find my passwords to try and get in.
I hope there was sound on it, actually. Wasn't really sure what was the case. How you doing, buddy?
Yeah, I'm doing all right, mate. I'm doing all right. Just getting ready to go to Singapore on Thursday. So things are a bit hectic over here. No cot data this weekend, which is annoying. I don't like being sort of I'm slightly having my arm tied behind my back because I haven't got all the week's information. I think it's going to be released today, so I'll do a little update in the Telegram channel when I get the new cot data, but it's not out yet.
Okay, no problem. I will get the show on the road by going to our 1 minute trading. And those of you who haven't been here before, put your hands up. Yeah, there's a couple. Thank you for joining us, firstly, and I hope you get something out of the show. We have got a twofold on my charts, if I can find the dash things. Here's the pound. Here it is. We've got two things that I'm looking at to trade on the 1 minute charts. One is gold versus the dollar. The other is the pound versus the dollar. And what I'm looking for is something like that, where price...
We haven't got your screen at the minute.
Oh, well, there you go. I've got screens all over the place. And I can't see which one. There we go. Hopefully you've now got my gold and pound 1 minute charts.
Yeah, we got
with a whole lot of Bollinger Bands sitting over them. Here's the thing, guys, those of you who haven't been here before, looking to trade off the red lines, back to the red lines, ideally. But what we're looking for is this sort of scenario where price hits the red line, then closes below the black line without giving me a new high. So preferably that has to be the high. So it's closed below here, didn't close below here, closed on here, and gave us a new high. So there's no trade there. So hit the red line, close below the black line, then we're looking to trade it in the opposite direction. Hasn't given us an entry here, hasn't given us a setup there either. So we just wait. When it gets to the red line, I will alert you, and then I'll let you know if we're going to trade it or not, based on what the next few candles do. But essentially we're scalping here. It's a 1 minute chart, so obviously we're scalping. We're looking for support to trade long, and we're looking for resistance to trade short. The reason I'm using this system is because I stole it. Well, I didn't really We each steal each other's methods, and changed it into something that agrees with me. And that's exactly what we've come up with here. Well, that's what I've come up with here with this little system. I need to see 2 candles close below the black line for a reason such as this, really. When they don't, if you were to trade the first candle that closed below the line and put your stop loss here, you would have been taken out. But if you wait for the second candle to close below the black line, then you've got a confirmation, if you like. Generally, you'll pick up a lower high, pardon me, if that is the case. But let's see if we can find an example as we go into the show. A few other things that we'll be looking at. I do have a couple of orders in the market. One is Euro versus the Kiwi short. I think that's actually been triggered. Yes, it has. I'll show you that one. Got a big double top here, and we've got a lower high here. Would have been nice to pick it up there, that's for sure. But we did have a little bit of a retest of the monthly pivot last week. Oh, pinch and a punch, by the way. It's not the first day of the month, but it's the first trading day of the month. And we've had a rejection of that monthly pivot of last month, 1, 2, 3 times. Last week was a game changer bar. Sorry, the week before last was a game changer bar. Those of you who don't know what I'm talking about, a game changer bar for me is something known as a key reversal bar, whose high is higher than the previous week, or candle whose high is higher than the previous week. Could be day. I don't go any lower than that when I'm looking to trade these, and closes on or near its low. The rule I use is 1/3 of the pardon me, of the candle lower is okay, but anything more than that, or less than that rather, is not. So in other words, I need 2/3 of the candle to be bearish. Then we got an inside bar. Now, once I've got a key reversal bar with an inside bar, then I go in the direction of the key reversal bar. So we've just been taken into that, a little bit out of the money at the moment, but I expect that to go short. The other one is pound versus the Swissy, has not been triggered yet. These are both on weekly charts, mind you. Pound versus the Swissy has not yet been triggered. Same sort of deal. Reject, 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 reject of this level where you can see my stop loss underneath. I'm looking for that range to fill. So at the end of the day, what's happened here is that range, I'll put it on there so you can see it a little bit clearer. That range has been broken. You start with the lows here. You could even pick it up to there. That's probably better. And I'm looking to play a false break of that breakout, if you like, just like it did here. Came back inside, went to the top. It's come back inside. I'm looking for it to go back to the top again. That one hasn't been triggered, but if you do want to follow it, the entry is at 1.1243, and the stop loss is 150 pips above that. Sorry, below that. I hope it's not above it. At what's the level? 1.1093. And my first take profit, which will be 90 pips above entry, is at 1.333, 1.3330. So a little bit less than 1-to-1, but I don't want to trade through there without taking profit. I'm going to knock 75% off if I hit that level and move my stops to entry, making that a winning trade no matter what. Only got to hit TP1. That's kind of where I'm at. I've got a whole bunch of structural positions that we may or may not get to during this show. There's a lot to get through. But going back to the minute chart, which is where we need to focus, nothing there at the moment. This didn't touch the red line, and that's important. Has to touch the red line. Nor did gold, I don't believe. No. So no trades as yet. Ash, what's on your watch list, mate?
I'll tell you what I'm looking at actually is the pound Swiss right now. I mean, there's a couple of things I'm looking at. I'm looking at the Aussie dollar. I think an Aussie dollar long is an opportunity that will arise. But let me just show you a couple of bits that I'm after. So
we were keen on that last week, weren't we? Aussie dollar.
Yes, yes, and I'm still sort of there. We got stopped out on that one, which is
I
which
didn't.
did say that it was likely that it would happen, and it might be a bit early for the trade, um, and it proved to be so. But let me just share my screen
While you're
because
doing that, guys, welcome to those who are new to the show. It's really nice to have you on board. Don't be afraid to ask a question, or if you've got an idea that you want to share with us, just like we're doing with you, then please do so. The chat box is always open. If you want to come on mic, if you want to come on camera, don't be afraid. Look at us. We're very brave coming on camera. Don't be afraid to come on camera if you want, but please feel free to put chat in the box and we'll answer the questions, or happy to share what you're thinking.
yeah, for sure, and even come on as a host. That's really what we want
Yeah,
for
we
trading
can
buddies.
take the day off. Cool.
This this is the trend line currently. There's this gap here which will need to be kind of closed at some point, but this is the current trend line. So this is trending down, no question. So maybe there's not an opportunity just yet, but I'm still looking for this one to go long. It will be obviously dependent on the interest rate idea from the Fed, and we're still 2 to 3 weeks away from the next interest rate announcement. But I think that this one's got a really good chance of starting to pick up and rally, and I think the rally could be quite long with this one as well. So I'm looking at the Aussie long, and I'm also looking at the pound Swiss long. Even though I quite like the Kiwi pound short, which should really sort of drag us towards the pound Kiwi long. Sorry, the Kiwi Swiss long. But I like this one. But the only issue is where we are in the actual picture here. This really is still in this sell zone. You could suggest that it's taken that area out, but you can see that was the position down there to take. Now, there's a trend line. Probably you could probably use that there. So that's the first bounce, really. So with this one, we might need to let it go a little bit, or if it pulls back just a little bit and maybe even touches this really bullish to the top of this really bullish bar, then I wouldn't be adverse to that coming through, because your stops could be there or there for a bit more safety. But I do quite like this one for a long as well, mate. One of the reasons I like it is
So
that
we agree on that one. That's good.
Pound Swiss. Yeah, and one of the reasons I like the pound Swiss is because I think the Swissie's kind of getting to that point where it will be one of the weaker currencies for a period. Um, Interestingly, if you look at
Sorry,
the
the pound or the Swiss?
correlation, what's that? Sorry,
Sorry, did you say the pound or the Swissy?
the Swissy, the
Yep.
Swissy. Yeah, Swissy looks like it's going to be sort of like it's coming into being a relatively weak phase in its year or in its
Certainly
cycle, I should
started,
say.
doesn't it?
Yeah, and the reason I say that is because the Swissy tends to do actually quite poorly against the pound when they lower interest rates in the UK, which is completely opposite of what is the norm. If you look at the pound when they raise, if the UK raise interest rates against the yen, as an example, it tends to rally. But actually, if when they raise interest rates, it doesn't tend to do very well against the Swissy. So therefore, if you lower interest rates, it tends to do a lot better. Um, Particularly if the economic picture is still driving prices, sort of higher. And we've seen some data this morning, nationwide HPI data come out from the UK, which came in at 3.7% from 2.4. So there is a bullish number there. There is some procurement PMIs coming out of Switzerland in about 20 minutes, which is why this might not be able to rally until those numbers are released. But it looks pretty good. We got some PMIs as well from the UK. Actually got a load of PMIs this week. We got some ISM from the US, which would be, again, if you're looking at the Aussie dollar, that could be a potential driver. ISM manufacturing data, that is due at 3 p.m. UK. So that comes in less than expected. That would be the trigger for me to take this one to the upside. So I like it, mate. I like the Aussie for a long at this particular stage. There's probably not the setup at this stage though. You know, as I say, if you look at the hourly is a bit scruffy and it is through this trend line as well. So it's going to probably need to take back this area. And when you take back that
Ooh,
area, you're probably also taking
what
back
time
this
frame is
trend
that?
line as well.
Hourly.
This is the hourly, yeah.
That's the setup.
You like this for a long? Oh yeah, off this here.
Yeah.
Yeah, yeah. Well, that would be good. That would be good. And I would suggest one to hold as well.
Interesting. Okay.
Yeah,
Now I've got
yeah,
something to do after the show.
yeah.
I can hear people's in the room who are possibly just a little bit too shy to put in the chat box, but I can hear them. I can hear the cog sticking over.
Oh
The
yeah,
Trump effect, the Trump effect on the dollar, right?
yeah.
What's that going to do? How's this going to influence this trade? I've got a
Well,
rejection bar on the pound, by the way, on the minute chart, so I'll call you out if I need to.
okay, okay, cool. So I think the Trump effect is going to be different to what it was last time. Now, if you think about last time, Donald Trump put a lot of pressure on the Fed to lower interest rates, and I think he'll try and do the same thing. I wonder whether that's going to happen. You know, because really the sort of stuff he's talking about, lower taxes, higher spending, that could drive inflation, and it would leave the Fed in a very difficult position to do anything on interest rates. However, the median interest rate for the US is 1.55%, and we're currently at 4. Is it 4.75? Yeah, we're currently at 4.75. So there's a long way to go back to the mean, back to the average. And inflation has been tamed somewhat. It's just a little bit over 2%, but it's not crazy high. And I think they've got enough room to lower them. The only thing is about the US is the jobs data is still really strong. And I think what the Fed are worried about is that they're going to lower interest rates and it's going to potentially tighten the labor market further. And that's going to drive wages, which ultimately will drive inflation. So they might even be the cause of inflation somewhat if they start sort of loosening policy too early. But I do think
I'll just
policy is
finish the
probably.
screen, mate. We may have a trade here. 2
Oh,
seconds.
cool. All right.
So we've got one close below the line, guys, on pound versus dollar.
Just see if we can take the screen. Yeah, you got it.
Yeah, should be able to. I'll go to that chart. There we go. Oh, order box. Move. So here we've touched the red line. We've got one close below it. We're looking for a second close below it. If that's the case, we'll place an order underneath the bar or candle, whatever you like, and look for some selling to come back. I've already got my stop loss in place. It's above this bar here. I'm just looking to sell. As soon as this candle closes, we will make a decision, and it looks like it has. I need to sell at market now. I need to retrace. It's not going to do it. Go on, get back up there.
Oh, you need to sell it off the low of the bar, do you?
You've got to be quick, right? You've got
Yeah.
to be quick. But it may retrace, so I may be able to get back in here or in here. So I'll put the targets on here. The target would be entry there, stop loss there. So what do we got? 5.9. We're looking at 3/4 of that would be 4.5.
It's about 40, isn't it? Yeah. 4.5.
We'll go with 126.83. 126.83 is there. So there's your first take profit. I'm not going to chase it, that's for sure. But if it comes back up here, I'll look to trade it. That is 0.75 to 1. At that point in time, if you hit that level, you would then move your stop loss to entry, which would be there, and see what happens thereafter. I wasn't quick enough to get into this, sadly, because it looks like a good one. So very, very close to your first take profit. and I'm guessing that hit it. Not sure because I don't have it on. Would have been very close anyway. So at this point,
Yeah.
your stop loss would be at entry.
So would you go back into this, mate, here?
No,
No, okay.
no, I've missed it.
So that probably would have. It probably would have. I wonder if it would have hit the take profit in the first instance because the of the. You're buying it back. Yeah, you're buying it back, aren't you? Yeah, you might have got it per target. Yeah.
Well, they're through there now.
Yeah. Yeah.
So there's your first take profit. Your stop loss definitely at entry now, and you can't lose on this trade. The target is 2 to 1. It's very, very difficult to put these trades on whilst you're talking. That's a fact. I want to say 5.9. So we're looking for 11.8, which is out of the screen. $11.8 is going to be 126.76, which is about there. So it's either going to hit here and take you out, or it's going to hit here and take you out. Obviously, the preference would be for that one. Anyone got any questions on that trade before I go any further?
That's good. So actually, it would have secured a 0.75% to 1 anyway.
Yes.
I mean, definitely now because it's gone well and truly through that first take profit area.
And that's why I like to do that.
Yeah.
Because, you know, gold is, well, this is not gold, it's pound. Pound at this time of day is generally volatile anyway. So the sooner I can get money in the bank on this, the better, in my humble opinion.
Yeah.
You know, I've seen these go a long, long way, but I've seen them go a very, very short way as well, and much rather get profit in the bank.
Yeah.
And
Yeah.
on to the next one, you know.
Yeah. Yeah, it's an interesting one, isn't it, with trading, and this is always the kind of big question for everyone, really, is that do you let a trade run, or do you try and get in and out the market just a little bit quicker, and it's the biggest challenge, I think, is that you know, and the reason it's such a big challenge is that you'll take a trade and it will, you know, hit a take profit area, turn around, you take another
like
one and it will go for miles.
You're out of the second position now, but it's a
Yeah.
winner. You know, so
Yeah.
I'm happy.
Yeah. It's actually there's not. I don't know, there's a bit of movement in the market today, but there's not loads of volatility. Not a whole bunch of volatility.
Keith Seifert. Keith. Not sure which Keith that is. Do I know that Keith? Is that Keith an Australian person who lives in Queensland? I'm not sure who it is. Okay, what is the Bollinger Band period that I'm using? Right, sorry, I should have explained that. The black line is a 20-period Bollinger Band with a standard deviation of 2. The red line is a 20-period Bollinger Band with a standard deviation of 3. Hope that helps. Sorry, mate.
Brilliant.
Oh, hang on.
No, I was just really making a comment about the about, you know, strategy, you know, trading strategies, if you like. You know, how you interact with the market is sort of is quite key. Because you know, as I say, you might be sort of somebody that decides that they're going to take profit early, but sees a lot of your trades just go, a lot of your trades just run, and actually just creating a lot more work for yourself. And then you might sort of find that, you know, the ones that you let run, if you'd taken the money early, you would have been better off. And it's, you know, one of the biggest challenges, I think it's one of the biggest challenges with trading is that you'll see two trade setups that look exactly the same, but they will react in a completely different way. and deciding which way you're gonna interact is really important. I mean, what I would say is, as soon as you've decided that, you just got to live with it and say that's fine, which is exactly what you've done here. You've said, look, mine are, I take my 3/4, which looks like it was a sensible choice as well in this example as well. Take my 3/4, and that's that. But the good thing about what you're doing is that you're allowing it chance. If it wants to go, you're allowing it chance to go.
I'm getting something for
Yeah,
the benefit of running. Yes.
yeah, which is great.
That's just my MO, and it really depends on who you are, doesn't it? What your risk profile's like, whether
Yeah,
you're happy taking little bits often, and that's the key. Little bits often for me is exactly where I live. I live in that space. But
yeah,
would I like to see a 20-1? Hell yes, of course I would. And if I can have a little piece of that, where did I hear that many, many years ago? Do I want a little piece of something that goes a long way, or do I want the whole of something that goes nowhere?
yeah, yeah. The Aussie dollar is holding quite nicely actually at the lows, mate. And do you know what? There's also, I've just seen a daily pivot just above that area you said that there might well be a trade. Um, I think we should watch out for that one. I do think that the Aussie dollar could be a decent trade if things move, if things
What are
do
you on,
genuinely.
15?
What's that? Sorry, mate.
What are you on, 15?
It was on the hourly.
Hourly, okay.
It was on the hourly that that setup was.
Yeah, still like it.
Yeah.
You could use a couple of trade lines, actually, it'd be the same thing. You could use that one.
Yeah.
You could use that one. Same thing. Waste of time. Or you could use, actually, this one won't work. And I'll tell you why it won't work. I didn't see that tail there. I was going to go from there to there.
Yeah.
But that's no good. So the trade line's correct. That's the one that I would use.
Yeah.
And you've got a couple of things going on here. You've not only got a false break of the trend line, you've also got a false break of the weekly pivot, which is sitting there. It's white, so it's very, very difficult to see. Let me change that.
Why did you define that as a false break, even though it stayed down below it for such a long amount of time?
Yeah, sure. The criteria I use for a false break is very, very simple. It's a break. Clearly, you have to have a break before you've got a false break. Then you've got consolidation, which you've got here in spades. This is an hourly chart. So 2, 4, 6. It sat there for 6 hours before it made a decision. Now, that could well be between sessions. It could well be between announcements. It could be anything. But in this case, where are we? Maybe Belgium kicked in at that point, don't know. London kicked in at that point, maybe. No, we're not there yet. Might be the reverse of that. There would be a reason why there were buyers here and sellers here, whatever that reason is. And whatever that reason is, here's what's happened. These folk who have gone short here they've been given plenty of opportunity to get out of that position, but then the big boys turned up, or somebody turned up and said, righto, it's time. We're not going down here, we're going up here. This is in my head, right?
Yeah.
Then it's hit a resistance level, which in this case is the daily pivot. And that must be open. That's not even open of London. That must be open of Belgium. Whatever it is. Price has gone straight back down. And that's the one that I like, because what it means to me is if these guys were truly in charge, then here's the point where they've come back in.
Yeah.
And they're going to drive price down. If they aren't in charge, and once again, it looks like they've failed at this point, then the point at which they're wrong is here.
Yeah.
So at that point, that's where I want to be a buyer. because there's going to be stop losses here now.
Yeah.
There's liquidity here now above this. If there wasn't before, there certainly is now because of this bar here. So I think you can pick up some momentum here, because all of these orders here right now are buy orders.
Yeah.
Because
Yeah.
there's stops on the short, right?
Yeah, like that.
So that's a liquidity point, in my humble opinion.
Yeah.
It may not happen,
Yeah.
but it's got an insurance policy built into it, right?
Yeah.
Because if these guys are taking back over, then price doesn't go back there anyway.
Yes.
It goes down here.
Yes.
But if it does, it kind of goes to my theory.
Yes. Yeah. Yeah. I like it. I like it a lot.
Eileen's got a question. Just to confirm, did I say Bollinger Band 22 and 23? Yes, I did, Eileen. That's exactly right. 20 period Bollinger Band with a 2 standard deviation is the black line. 20 period Bollinger Band with a 3 standard deviation is the red line.
Well, I reckon we're just about ready to wrap up, mate. We got George in the background, unless there's anything obviously that anybody wants to talk about. But
then this is George's last show too. He's busy for the next couple.
Yeah, yeah. Well, my next show will be from Singapore, so I'll do it in the room with everybody else. But I'll of course I'll meet up with you while I'm out there.
You're about to have a bit of a shock to the system, mate.
You're
going from second day of winter,
yeah,
in London to 3,675 degrees Kelvin in Singapore.
Yeah. Do you know what? It's eerily, well, maybe it's a bit early winter now because it's not that cold here. I mean, I say not that cold. It might be just to somebody that's not used to this climate, but this climate actually, I'll tell you exactly how cold it is now. Considering we are in winter, we've had a couple of really cold days, but it literally has been a couple. It's 9-10 degrees here right now, and it's going to be like 12, 10 degrees. No, 10.
Oh,
Between 9 and 10. Yeah.
You only
9
get
and 10
days a year in summer, don't you? 19 degrees.
Yeah, yeah. Well, tomorrow we got 12. Thursday we got 14 degrees. So we're in the low kind of teens. We're in 10s to the low teens. Now normally we'd be closer to, between 5 and 10. But this time we're sort of between 10 and 15, which is quite warm really here for winter. Nowhere near as cold. But February's usually the brutal one. January, February's usually when it gets really, really cold. But it's not that bad right now. But I've got to be honest, mate. When it's like this, I like this temperature. I really like sort of cool. Autumn's just a really nice time of year. If it's dry, and relatively fresh, I really like that as a temperature. I was kind of hoping it would be bitterly cold here. So I'd be craving some heat, but it's not. It's not that cold.
Fair enough. And happy days.
You
could almost think about going down the beach and jumping in, mate. Almost.
I wouldn't go that far, but yeah.
All right. No more trades on the pound at this moment. No more trades no trades on gold. Hasn't hit the supreme red line yet. So I'll be pulling up stumps very shortly.
Cool, mate. Okay.
Yeah, guys, you really got to be on the ball to hit those entries. It's not easy on a 1 minute chart, and when you're talking, it's even harder. I can assure you. But
I've got George ready to go, so let's play him. We'll bid you all goodbye, and we'll see you Monday. I'll hopefully see some of you live in Singapore on Monday too.
Righto, guys. For those of you who don't know, George is going to give you a session on price action. Which is pretty cool. He's a very, very, very studious person, and he comes up with some excellent things. Right, mate. Have a good week. Everyone else, have a good week. We'll catch you next.
Good day, traders. I trust you're well, and I trust you're enjoying Trading Buddies. And guess what? We are already into December. Thanks to Jeff and Ash for having me as their guest presenter on this show. Absolutely fantastic. Let's have a look at the markets that we have been tracking and see where we got to. Now, where we got to, where we're likely to get to as this month opens up, last trading month of the year. German 30 daily market. Look at where we are. German 30, German 40, same kind of, same market. We are in a trading range, and unless the bulls do something dramatic, which is possible, this kind of size candle, if they give us 1, 2 candles breaking out above the all-time high, October 2024, then of course they will be setting up themselves for the possibility of reaching a measured move of the height of this trading range somewhere up here and accelerating up before the end of the year. But they need to give us successive bull candles to break out above this all-time high. The bears, of course, pretty satisfied that they can defend that. And why do I say that? Well, if you look here, we have a wedge top, 3 pushes up, 1, 2, 3. We have, this high. This was the high of September, micro wedge top. Bulls tried 3 times and failed. We have within here another wedge top in the month of October, 1, 2, 3. And then since then, they have defended that level quite successfully. You can see the 3 pushes up, or you might just see, 2 pushes up, double top, all sorts of things, low, high, double top. So there are bears in the market defending this price level. So we can expect bears to come back into the market. There is nothing that the bulls have done that would cause the bears to give up. I mean, if you look where we're here, very strong bull breakout. And when we got to the high of July, bulls failed to accelerate up. Bears came back into the range. And since then, every time the bulls have tried to get to an all-time high, failed. Breakout, failed. Breakout, above this high, failed. So the bears are pretty strong. But will the bears do something dramatic to show that they are strong in this last month? It is possible. It doesn't take much to change the structure of the market. I mean, look at here. 1, 2 candles, boom, and the bears sold off. If you get a candle like that, and that will close beneath this low, the lows that have been created since October, and a follow-through candle, and then the bears will be thinking, well, hang on a second. If we put 2 successive bear candles, we have a chance to get to this measured move. If you get to this measured move, who knows, if the bulls don't come in to create a trading range, we could accelerate down. So we just need a little bit more information on this market on the daily chart to decide which way to go. Oil, UK Brent trading range. I mean, here, lower high. We spoke about that last week as a potential. Bulls, if they're strong, give us a strong bull candle, failed. Bears were strong enough to give us a strong macro double top, lower high, but then they failed to follow through. So again, unless there is a dramatic move by either side, the bears need to give a strong bear candle to close beneath here, test the lows of 2024, typical low. The bulls would need similarly to put strong bull candles, successive breakout candles to get above you. And if they do, then there's a possibility that we come and test these levels. Right now, if you ever look at it, and if you had to do something, what should you do? Probably say, hang on, George, if I had to do something, I'm going to trade as a trading range. If we get down here, I'll probably buy it, get back into the trading range. If I get up here, I'll probably sell, get back into the trading range. Nothing in this market is giving us clear indication who is likely to take over. But things can change with just 1 candle. So we need to observe. And if you trade in oil on the daily, you need to wait to see what you get at the high here. Failed breakout, distant enough high tails, sell back into the trading range. Or bull trend candle, conservative bull trend candle, can take a breakout trade to test those levels. Same for the bears. One thing, you wait. Consecutive bear trend candles, can look to sell and see if you get a measure of moving break beneath this low. And if the breakout fails and you get a bull low test candle, even something like that, inside candle, worthy to buy. So we have to wait. Silver, again, we have just entered into this level of October. All we need lost concentration. The bears who have been creating these lower highs are strong enough. They need to give us a strong, again, strong trend candle closing near its low. Then other bears can come in and just sell below that with stop orders, hoping to see bears breaking out beneath this low, maybe go a little bit lower. If we just carry on going sideways, the trading range just fine. If we get another candle like this, we have a double bottom here, low test, bull, low test. If the market comes back, give us another low test, it is worthwhile for the bulls to buy and hoping to get up there. Now, if you're a bull who bought a double bottom, hoping for acceleration, I doubt very much you will use a touch stop. Some bulls could, happy to be stopped out more often than not and make a lot of money. Others will have said, okay, I'm going to use a measured move stop, either of this trading range, so more conservative, wide stop. You still can make money to get to that top. Others just probably look at the measured move of that, and they're already in and just managing their trades. So favoring the bulls, if we get bull acceleration up, breaking out above here, bulls must buy. For the test up there, there's enough in this range for them to make a good return 1 to 1, 2 to 1. Or even if you get a bit of an acceleration up, fails in a high test, in which case we get 1, 2, 3, the wedge bottom, and the low test, bulls can buy. Euro yen, we get into tests, or we tested actually. This low here, higher low in the month of September, low of October, and bears have a good opportunity to follow through. I mean, bears could be selling, and some bears said, okay, I know it's very weak, breakout, pullback, I'm gonna sell that, use a wide stop. By now, they would have taken off some of the risk. Nothing here to say tighten and stop a little bit lower, but depending how you trade, you'll take on some of the risk. Some bears will say, okay, I'm still gonna sell here, but I know if I sell here, there's nowhere to put my stop here. I still have to put a wide stop so that if this fails, I can get out with minimal loss. But if it accelerates down, I get a big enough candle to come and test here, then I can always manage my stop. So favors the bears if they know how to manage their trades. If you're not comfortable managing trades in a breakout, best to wait for something with greater clarity. Bears could get something like this. You take your trade, it fails, but you manage it. When you start to get low test, you exit out of the bear trade. Pound, spoke about this. I showed you, if you ever look at the video, last week's video, when we were talking, we were actually saying, the bears have an opportunity to continue to sell a little bit more aggressively. We spoke about this tail, but it said if they're strong enough to break out beneath that, they could get to all the measured moves which are down, but they were not. They failed to do that, so the bulls just see all of this. Okay, bears were strong leg 1, leg 2, but they're not strong enough to get to the leg 2, which is down here. Again, it's in that other earlier video from last week. The bears were not that strong. The bulls have a chance to accelerate up. Some bulls already would have been buying above here, using an appropriate stop, knowing that they can manage their trade and hoping for greater acceleration. Some bulls who have not, who are not in the trade, will be saying, hang on a second, I'm going to put an order above here to buy above here, depending where the market is right now at the open. They might have been triggered in, but there's no ways you put in a stop here or a stop here or a stop here. The stop is going to be way down here so that you can manage your trade. If it fails, you can get out in your risk. If it accelerates up, then you can start to manage your trades. Well, traders, I hope you have enjoyed my presentations on Trading Buddies. I am traveling with the Actions to Wealth team, Singapore and Malaysia over the next couple of weeks, which takes away probably most of the weekends until the end of the year. So I am not sure I'll be able to come in with another presentation due to the travels and the time zones and all of these interesting things. But I trust you've enjoyed the show and you continue to enjoy the show as Jeff and Ash bring it to you. But for me, I have thoroughly enjoyed myself. But for now, it is bye-bye.
Dashing through the bush in a rusty Holden ute, kicking up the dust, esky in the boot, Kelpie by my side, singing Christmas songs. It's summertime and I am in my singlet, shorts and thongs. Oh, jingle bells, jingle all the way. Christmas in Australia on a scorching summer's day. Hey! Jingle bells, Christmas time is beaut. Oh, what fun it is to ride in a rusty Holden ute. Come the afternoon, Grandpa has a doze. The kids and Uncle Bruce are swimming in their clothes. The time comes round to go. We take a family snap, then pack the car and all shoot through before the washing up. Oh, jingle bells, jingle all the way. Christmas in Australia on a scorching summer's day. Hey! Jingle bells, Christmas time is beaut. Oh, what fun it is to ride in a rusty Holden ute. I said, oh, what fun